Hello, I'm Michael Glass from michaelglass.com, where we focus on making informed decisions about our financial future. Before we begin our video, you want to start off with our disclosures. Any symbols you see today should not be inferred as a trading recommendation. No matter what form of investing you choose, stock, forex, futures, options, they all have a level of risk associated with them. Any strategies we show today are for informational purposes only. Future results are not guaranteed. And finally, any investment decision you make is solely your own responsibility. Trade at your own risk. So this is our stock market technical analysis trading plan. In our video, we'll look at the past week's economic calendar and also look forward to next week. We'll see what happened as far as the most recent price action to identify key support and resistance price levels. We're going to look at the charts of the market leaders, Apple, Google, Goldman-Sachs, Priceline. We'll take a look at those. We'll look at the dollar, gold, and crude oil charts to see if there's any leading sentiment. And finally, we'll have an education spotlight at the end. I'd like to start off here with a end of the year quote for you that simply says, "Nobody can go back and start a new beginning, but anyone can start today and make a new ending." So as we close out 2011 and look forward to 2012, we can say that if you're not satisfied with where you are now, you can change your path. You know, there's that movie, A Knight's Tale with Heath Ledger. Really good movie. And the whole thing that was change your stars, you know. And you know, you can change your stars, you can change your path. We certainly recommend that instead of investing in all these systems and all these indicators, that you take the time to invest in your trader's mindset. Find a good coach, we can help you with that. Find a good trainer, somebody that you trust, and invest in your psychology and invest in your trading mindset, and you'll see your trading portfolio, your trading results follow the path that you're looking for. So as we look at 2011 and look at what we can see, we see that the Dow Jones is the only market that rose for the year. It was up 5%. Anybody that did the dogs of the Dow, maybe you found some profit there. The Nasdaq fell 2.1%, and the S&P 500 was basically flat at 0.5%. But when we compare that to some of our major markets, we can see that the FTSE fell 6%. That's with the UK. I don't have it here, but the DAX was down. The Nikkei for Japan was down 70%. And look at Shanghai. It's down 19%. Now, the thing about Shanghai and 19% is it's down 600 points from 28 down to 22, you know, give or take. And so that's how we got all the way to 19%. So, you know, even though we're down or we're flat for the year, we're better off than many of the major markets in the world. When we look at the big winners and losers, we can see that consumer staples was a big winner, up 10.5%. Utility stocks, that sector was up 14%. Losers, the financial sector was down almost 20%, down 19%. And airlines is down over 35% for the year. So there are some sectors that really took a hit. Crude oil rose 9.1% for the year, and gold rose just over 10% for the year. Overseas, as we look at 2011, we've had the Middle East tension, several countries being liberated, Egypt, Libya, now we're talking about Syria. So we had the tensions in the Middle East. But don't forget, go back to March, one of the big overseas news was the earthquake and tsunami for Japan. And of course, we've been dealing, the second half of the year, we've really been dealing with the European debt problems. The pigs, Portugal, Italy, Greece, Spain. Now we're hearing that, you know, many of the other Euro companies, Germany, the UK, they're all facing some issues there. So, and the stability of the Euros and the Eurozone countries are certainly in question. As far as here in the States, the earnings remain strong for the majority of our companies. And as far as economic data, the main thing here is, although we saw the end of quantitative easing as far as the monetary policy, it certainly has remained accommodative, and certainly interest rate has remained at a consistent low for the year. So we saw some changes, again, the end of quantitative easing. Many people are looking for QE3. We haven't had it yet, but the policy still remains accommodative and willing to act for the market. So That really kind of gives you a good overview of what we saw here in 2011. As we look at starting off 2012, we do have Mosaic, a big company. Maybe we'll see something as far as the first big company reporting 2012. Really don't expect much of that to impact the market. However, as we do start 2012, Monday the markets are closed for New Year's, the day after. But you can see this week starts off with a bang. We do have ADP on Thursday, and of course our employment situation on Friday. You may get a window on Wednesday with the challenger job cuts, but we have a lot of employment data coming out this week that certainly can set the market off. Some people still may be not getting their money in until the second week is investing in the market. I know some groups that aren't starting until the 9th. But overall, some big data that can affect all markets. Okay, as we begin to look at the charts, I do want to give you a little disclaimer that beeping you're hearing is our fire alarm. I mentioned in our last week's video that we were moving into a new house, so we're here, and yes, they all need to be replaced, so I got to go get a step ladder. Haven't done that yet. So I apologize for the beeping noise. But as we look at the S&P 500 here on our daily chart, we can see that our story remains the same here from October, and that is resistance of the 200 moving average. As we look at the October low, we also have an uptrend line that the buyers are observing to find value. So as we bounce here and bounce here, we're starting to form a wedge, resistance of the 200 moving average. Or you can go up here to an ascending wedge using the 1300 moving at 1300 for resistance on our daily. And again, waiting to see which way the market's going to pop as we sit here around the 200 moving average. What's going to be our catalyst? Now, I can say next week we may have some catalysts with our jobs data. We really haven't had much going on here in December. Our indicators with that chop are just basically sideways, a little overbought here on stochastics. As we zoom on out here and go to our weekly, you really get a good visual of what's going on here and see that we really just didn't do anything here this week. And we also get a good visual on this ascending wedge that I'm referring to, that the market needs to break out in one way above 1300 or down here below 1200. Which way is the market going to break? What's going to be our catalyst? Our indicators on the weekly are all sideways. One more time on our monthly. On the S&P 500, zooming on in, and we can see what's going on here. This pullback that we've had since May, found support at the 200 moving average here in August, hovered here August, September, October, November was a pullback month, and then basically December is a doji month. So two dojis here basically back to back, and we can again see that ascending wedge that we're referring to here. So what's going to be our catalyst? Even our monthly indicators are basically sideways, coming out of overbought though. So which way will the market go from here? What's going to be our catalyst? Now let's zoom on in. Remember, the S&P was down basically 0.5% for the year, but the Nasdaq on the other hand was down about 5% for the year. So we'll zoom on in here, take a look at it, see what we can see. Still same thing, resistance of the 200 moving average. Notice that right here we didn't even make it back up here to the 200 moving average as we move sideways. We do still, however, have our uptrend line that we're going to watch here as buyers are finding value here. But again, the same story here as far as our ascending wedge, but the Nasdaq is a little bit weaker, and we see that because the Nasdaq closed a little bit lower. Our indicators are all weak on the daily. Zooming out to the weekly, zooming in for you. And we can see that doji once again put in here in the weekly. Again, we can see that ascending wedge as the market's moving higher and finding resistance here at 2740-ish. Again, which way is the market going to break out? Indicators are all sideways. And one more time to the monthly. Zoom in for you. And again, we can see our back-to-back dojis here for November and December. And again, our ascending wedge is even easier to say. We're coming out. Indicators are nowhere, but they're coming out of overbought. Our downtrend, finding support at the 50 moving average. Which way is the market to break? And again, we do have some catalysts this week with our employment data. Let's take a look at our market leaders to see what they're telling us. As we begin to look at our market leaders, I will give you a little insight. One of the new channels that we're going to be providing for you for 2012 is going to be called You Make the Call Stocks. You Make the Call Stocks. And what we're going to be doing is these market leaders that we're doing here, we're going to give you 5-minute videos just on that stock, so that we're going to give you all the information you need to know. These detailed weekly videos that we make, we're going to do those daily for each one of these stocks to really give you an insight. Well, daily, it's going to be, close to daily. It's a lot of work. So to really give you insight, when you get on YouTube and you Google these stocks, you see a lot of general stuff about the S&P 500. We're going to give you detailed stuff about these stocks to help you make the call. So starting off here with Apple, we talked about this last week, what would happen, and as we zoom in, what happened, we thought would happen, went right up to our past resistance line, kind of pulled back off of that. Some of our moving averages acting as support, but Apple definitely bullish. You can see on our market profile that point of control now is at 405, and we're sitting here at some volume resistance, a high accumulation of volume, so it'll be interesting to see. But what's also important is that you can also see new high here. For this time period. That's not a new high. That's just a new high on this time period. Amazon, so Apple bullish. Amazon we know is weak. And what's important is what was one support. We had a descending wedge going on here. Support at 179. We broke that. Once we broke that, we came back and tested it as resistance, held as resistance, and we're falling back. And here we are testing the 500 moving average at 167. We don't always see that 500 moving average. So Amazon, a clear downtrend, and clearly a little weak here. So Apple bullish, Amazon weak. Over to Google, and Google, what's cool about this, look at Google, nice chart. But once we gapped up here at the earnings, we held the gap up, and now we just made a new high. Look at that new high here on Friday, 646. So you gotta say Google is strong. So Apple strong, Google bullish, and Amazon weak. Goldman Sachs, we told you in the intro, financials down 20%, almost 20% over. And so we can see that downtrend on Goldman Sachs. We see this descending wedge coming into play here. So we'll have to see, will this 8750-ish, 8760-ish, will it hold up? Little sideways action. Goldman Sachs sideways to down. IBM. IBM sideways to up. Made a new high here at 194. That's good. Pull back, kind of tested our 177, 180 support price level. Now moving sideways. So sideways to up there for IBM. Intel, I believe it's kind of following the same pattern here, just not the highest price. Went up, made a new high here at 25. Zooming in for you. We could draw an uptrend line here. Really could say you can see that ascending wedge here on Intel, moving sideways to up. So Apple sideways to up, Google sideways to up, IBM sideways to up, Intel sideways to up, Amazon down. MasterCard, the best chart yet. 384, 385 new high. Definitely sideways up for MasterCard. Netflix. We know once 300 now, sitting here at 70. Sideways, really starting to fall into this range between 61 and 74. Sideways. And finally, Priceline. Huge range between 440 and 550. Up and down. Most recently tested that 440 bottom. Now finding resistance at the 50 moving average. So sideways. So primarily we have sideways up. We have a couple down, a couple sideways. So our market leaders are looking pretty strong. Again, we go through this for you in about 2 minutes. For this particular weekend video, we're going to give you 2 to 5 minutes on each of these stocks in our new channel, You Make the Call Stocks. We're going to finish off here with our market sentiment leaders here, the dollar, gold, and crude oil. And maybe we'll do a channel for these. I haven't thought about that. But first, starting off with the dollar, of course, what's interesting is that as the dollar is making its way back up here, the market has gone sideways up. So usually we have an inverse relationship. Once again, we can see the dollar testing this 81, 82 resistance price level and fell off. So we're in a new range here between 79 and 81, 82-ish, 81.20-ish. But definitely we'll come over here and see the point of control here at 80.85. Look at the volume in here. So there's room between 80.20 and 80.80. A little vacuum where we're sitting at right now. The dollar is definitely strong. And with a strong dollar, we are seeing some weak gold. Even though we made this beautiful new high here at 1900, we're off 500 points from that, as we're all the way down here to 1550. Okay, so that's 400 points. One thing that's interesting about that, let's zoom back out here. Alrighty, and we can kind of see right here. Let's zoom in a little bit here, and this is what we're going to be watching now, 1485. So as we came down, we tested the 200 moving average as resistance. It did hold up as resistance, and now we're falling again. And let me show you that. Here's the market falling, came up, tested the 200 moving average as resistance, and now we're falling. So 1485 is the next support price level that we're going to be watching here on gold. Finally, crude oil, that 96 to 102 range remains to be our range to watch here. There's 96. Here's 102. That's the range we're in. That takes us back to the beginning of the year, where we were in this same range at the beginning of the year, and now we're finishing the year at that same price level. As we come to this week's Education Spotlight, we're going to continue and finish off our section of journal. And this is kind of convenient that we end the year talking about trading journals, because that is, what we should be doing right now, reflecting upon the year, reflecting upon our trades, our systems, making sure that they still align with the current market conditions. And we have to understand the most important thing about our trading journals, it makes sure that we're paying the right cost to trade, the cost of doing business. We always say there's no such thing as a losing trade. It's the cost of doing business. And by trading, you are paying for the potential lessons that the market provides on each and every trade. And if you don't take advantage of those lessons or the opportunity, and you don't capitalize on what the market is trying to teach you, well, then you're wasting your tuition. You're wasting what you're paying to learn from what the market has to give. The cost of doing business. The market is always providing lessons. It's always giving insight, and you have to take the time to review what you're doing and make sure you're taking advantage of those lessons, that your tuition is being well reciprocated by what you're being taught and what you have learned. Take the time to learn from what the market, and again, you'll see the changes that you're looking for in your trading portfolio and in your trading results. Again, big things planned for 2012, new channels, new information, all about providing value and meaning to our subscribers. So make sure you like, you comment, you subscribe. Tell us what you want to see. Tell us what you like. Tell us what you don't like. I reply to every comment. So make sure you do that, and we'll make sure to keep you informed of what we have come down the pipe for you for 2012. Right now on Facebook, we are You Financially Literate? And we got a Move Up with Mike on Twitter and YouTube. And we've got the same resources for you. Again, as we talked about at the beginning, if you really want to change your trading results, if you really want to become a consistent, profitable trader, it's not about a system, it's not about an indicator, it's about your trading mindset. We can help you with that through our coaching, our mentorship. We can help you through our video course. We're not going to break you on a video course because we want you to have time to affect and change your mindset. And so that's why we're allowing you to get this great video, 3 videos covering everything you need to know about trading. Only $99. You're not going to beat that anywhere. And it also comes with a free coaching session to make sure you understand the lessons being taught. And then we can transition from the lessons being taught in a video to developing a personalized trading plan for you that really takes who you are as a trader and maximizes and makes sure that your tuition, what you're paying the market, is being effective, and more importantly, that your lessons are being learned. Because in the end, it doesn't make a difference about the system, the indicator, or whatever room you're in if you can't pull the trigger. And we hope through our coaching and through our training, you can have that psychological capital to pull the trade on each and every trade. Guys, God bless. And I hope your 2011 was blessed. But more importantly, I hope your 2012 is the new ending that you're looking for. Thanks, guys, and I'll see you in 2012. Happy New Year.